You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the show where we view some volatility, as you might have assumed from the title. Of course, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from ye old Options Insider Radio Network. And you guys know the drill. If you're listening to this via the old Vol Views feed, we like you guys, but if you want to, if you probably would be inclined to head on over to wherever you're getting this and upgrade to the full network feed if you haven't done so already. That means that you get not just this show, but you get pretty much 11 others. So you'll get your fill of options content for advisors, for volatility traders like this program, for futures options traders, for active retail, for beginner retail, for tech-savvy folks, all of the above, plus some daily news and a bunch of other good stuff. So head on over there if you haven't. Upgrade your free subscription. I put subscription in quotes there. And while you're there, if you like it, leave us a nice review. We always like that kind of stuff. We don't ask questions there because we don't tend to get to those fast enough to answer questions in a reasonable. You know how to ask those questions in the other outlets. But if you got a review, head on over there and feel free to leave it. Of course, you can always grab us via our mobile app. And if the hardcore of you who like to tune in live, a fun little bonus for you guys, we put it out there every Friday live via Mixlr, MIXLR, noon Central, 1 p.m. Eastern. Head on over there, grab the link. And you too can enjoy the show, see how the sausage is made, ask questions, all that fun stuff. A lot of vol popping off this week, so a lot of fun stuff to talk about. And joining me to do just that, starting off, he is the greasiest of meatballs. Maybe one day, maybe perhaps today, we shall have some theme music for his segment that he's been bugging me about for so long. For now, we'll just say, where the heck is the meatball? Mr. Mark Sebastian from OptionPit.com by way of Carmen Line.
I am at our world headquarters in beautiful, sunny Chicago, Illinois, right on LaSalle Street, overlooking the futures and derivatives capital of the world, the Merck Board of Trade, CBOE, and of course all the beautiful, great banks of past, the old Continental Illinois, right across the street from me, Bank of America, formerly Harris Bank, right across from me, and then I got the Federal Reserve over here on the other side. So if you're not familiar, it's just a joy.
If you're not familiar with the LaSalle Street corridor, listeners, you're not from Chicago, let's think of the scene where the Joker fought Batman in The Dark Knight, and it's right there. Let me ask you that, by the way, Mr. Meatball. Is there a huge kind of spinning meatball on top of the global headquarters of Carmen Line and Option Pit, kind of like, the Daily Planet spinning globe in Superman? Do you have that on top of the building yet?
Yes, you don't see it. It's in a fork. And it slowly spins. There is a little bit of
sauce. Little sauce dripping off for the tourists.
Yeah, there's a little bit of stuff for the tourists.
There you go. Walking down the South Street, listeners, you too can catch a drop of sauce. So watch out. Don't wear your finest white even after Labor Day because the meatball might get you. All right, and if you if you don't catch that, maybe you're a little bit farther west. Maybe you can catch our friend. I don't know if they have 4 offices. We'll have to ask him. I know he's been moving around of late. He hasn't been on in a while. We're happy to have him back on the old VolViews show. He is Ophir Gottlieb. He is the founder over there at Capital Markets Labs and creator of some pretty cool back testing software that we like to use around here called, I think, CML Viz. At least that's the URL. You can find it there. Mr. Ophir, welcome back to the show. And where the heck are you guys based out of these days?
Hey, Mark. Great to be back. Yeah, we're in L.A., West L.A. We were going to have the spinning meatball with the fork to honor Mark, but it's 104 degrees in October, and so the meatball just fell off the fork. Now
Yeah,
it's just a spinning fork.
Wouldn't look too good. Plus, Mark's kind of litigious. He may come after you saying that's his trademark, so you got to watch out for that. So here you're holding down the fort, the lone options outpost in the otherwise options wasteland of Southern California. I like it. So keep fighting the good fight. Meanwhile, we're going to fight that vol fight now because it's time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. And I think the technical term for today's action is just holy crap. Because it is off to the races out here today. We've got a lot of big earnings popped off last night. We'll get to a lot of those individually in a little bit when we get to the earnings volatility segment. So we'll talk about your Amazons, your Googs, your Softies, maybe even look back at some Chipotles and some Twitters and some other fun stuff. But I think the moral of the story, at least so far for this earnings season, is buy the heck out of that vol because people are just blowing through their straddles left, right, and center, 1.5x, 2x, just crazy town. And the markets are reflecting that today. S&P up nearly a full percent, about 0.8%. The NASDAQ just on fire, up 3%. And this is probably, I think I saw this is their biggest single day point gain, or they're close to it since over a year and a half now. So just on fire up there in tech heavy NASDAQ land. The Dow kind of playing the laggard today, pretty much fractionally unched on the day. So if you're loaded up with Dow names, you're probably not a happy camper today. And of course, all this size green on the screen means VIX, once again, after flirting with these just unfathomable lofty highs of 11.5, is now deciding discretion to be the better part of valor and retreating back to the downside. It hasn't broken through to single digits yet today, but it bounced off the 10 handle very briefly. So we may see that by the time the show comes to pass. I wouldn't mind that myself because that would be nice and in line with my crystal ball pick for this week. So we got about an hour here. Let's see if the VIX can do me a solid and line up for that. That'd be a nice string of 3 or 4 weeks or something in a row. So that'd be pretty nice, but we'll see. I can't win them all every week, so we can't be gluttonous here. So far, VIX given up the ghost. So let's start with the man holding down the chair out there in the options wasteland of Southern California, bringing light to the darkness out there, shall we say. Mr. Ophir, it's been a crazy week from vol perspective, from an index perspective. What's been catching your eye out there from a volatility perspective this week?
Yeah, for a second we actually had like normal volatility, right? Like VIX was over 10 for 7 out of 8 days. Monday through Thursday we saw VIX close over 11 and rising each day. And you kind of thought, okay, maybe volatility's back and whatever. And then just cataclysmic beats by the most important tech companies. And I think we are going to close with a spot VIX below 10. And, I think everything is just backwards. Usually when there's a huge move in the market, the larger moves are down. Now NASDAQ's having its largest move in a year and a half. And at least the market doesn't even know how to go down. So just even if you look at the skew in VIX, it's all back to normal. Everything's just back to normal. It's like we just erased an entire week because tech had huge earnings, and had you looked last Friday and looked now, I say, yep, everything's normal.
Yeah, this quote unquote normal, I love it because VIX of 11, close to 12 doesn't it seem almost like, oh my God, it's so rich. There's so much vol in the marketplace now. We can't handle. Don't know what to do with an 11 VIX anymore. It seems so lofty. It seems so crazy because we've all been beaten into submission by this endless run of just nonstop volatility erosion for pretty much the entirety of 2017. That when VIX gets up to 11 and change, it seems like, oh my goodness, Here we go. We're set for some action now. So yeah, we were flirting with that normalcy. It seems like that normalcy has come to the end because a lot of people were thinking this quarter would put the lie to the rally. We'd finally see some real numbers out of these companies, and we're going to clip the wings of this rally. And it has been anything but. It has been even some names that people are saying are comparatively overpriced. Again, I don't want to get too much in the single name stuff yet, but like Amazon, the bridge too far, buying Whole Foods, and lo and behold, they're just blow the doors off of it. Yet again. And they're scaring more industries. You hear rumors they're going to get into the pharmacy business now. So pharmacy stocks getting crushed across the board. So it's funny. The shadow, the specter of Amazon looming ever larger. Again, we'll get to the individual name stuff in a little bit because there's a lot of vol popping off there, as you might expect. But first, let's go over to the global headquarters of all things Pastelicious and see what the greasy meatball, what caught his eye this week.
Well, the fascinating thing was things were really, really ugly on Tuesday. At one point, the S&P was down a full 1%. We actually had the cash index above the November future for about 4 minutes. And then something really strange happened. And, I share an office with an S&P futures trader and who's been at it for a while, and he's very good at it. And the two of us looked at each other and he was like, what just happened to the VIX? And I look, and the SPOOs had rallied 4 points, 4 handles. So we've gone from down 26 to down 22. And the VIX cash had gone from 13.15 to 12.5. I mean, somebody flipped a switch and said, short every single piece of volatility you possibly can. It's over. And that was the end of it. It took a little while for things to move along, but by the end of the day on Tuesday, despite the fact we'd been down 1%, the cash ended up a whopping 0.7%. And actually, that might have been, was that Wednesday or was that Tuesday? That was Wednesday, wasn't it, Mark? And then yesterday, kind of a little bit of a bounce back day, and then they kind of sold it off into the end of the day because they were worried about earnings, and then we get this blowout earnings and we're good. What I think a lot of people failed to see is how much earnings went up last night. Just a huge amount of money in the stock market reported earnings last night. If you look at the S&P 500, the S components, let's talk about who just reported. So Microsoft reported yesterday. They're the second biggest. Amazon is the fourth biggest. ExxonMobil is the eighth biggest. They all reported. Alphabet Class A and C are the 9th and 10th biggest. They both reported. And then Chevron is the 13th, and they reported last night too. So you had inside of the top 13 component parts of the S&P, 1, 2, 3, 4, 5, 6, 7 of the top 13 components. All of these components account for more than 1% of the S&P 500. They all reported last night or this morning. And then you wonder why volatility was able to kind of hold up a bid. Were we a little nervous about Fed Gov stuff? Was there some other things there? I'm sure there were, but I don't think that was what was really holding things up. I think what was really holding things together was the fact that we're worried about kind of earnings coming up this week. Some of the FANG names that have really led things. If you look at the rally, how much of the S&P rally this year has been from quote unquote FANG names? A lot. And so all of those names outside of Facebook and Netflix, which reported a few weeks ago and missed, were reporting today. So Intel reported as well, and they're somewhere in they're number 22. So they're huge as well. So a lot of big companies reported. So I think that is why volatility was kind of acting the way it was acting, and I think that probably contributed to a lot of what we saw this week in terms of taking a little money off the table. If you look at that big sell-off, yeah, the S&P was down. It was really led by the NASDAQ stocks. NASDAQ still ended up down 1% on Wednesday. So it was pretty much, it looked like there were some other things they were talking about, Fed, blah, 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 blah. But it appeared to be entirely tech related.
It's funny. I was going to save it for later in the show. Let's just get to it now. Everyone's so excited about these earnings and just what's going on out there. So we'll flip the script. It's for Ophir. Let's do it for Ophir. He loves single name stuff, and we'll say it's for him. And we'll just dive into the single names because that's all anybody has got on the brain right now. Like I mentioned, things that is lighting it up. Like you just pointed out, so much of the market of the S&P and other names are just, of course, obviously the NASDAQ are just coming out last night and all this week, and it's really just been just tumultuous. It seems like it kind of got kicked off earlier this week, really with Chipotle. They were the one who kind of first really blew the doors off their straddle, maybe in the wrong direction if you're a Chipotle bull, but still, they were rocking and rolling. They were pricing in about 20%, or $20, I should say, 20%. That'd be something. They ended up doing something like that, but they were pricing in about $20, right about 6.25% earlier this week, and they blew the doors off to the downside again. People just leaning on the negative stories for Chipotle. They really can't take a break. They were off about 2x, so they were the first to really double their straddle this week. They were off about $41. And as Tubby pointed out on Option Block yesterday, actually, think about how bad that is. Not just in light of any given year. The stock's off almost 50% this year. But now to be off that much in light of everything else just up orders of magnitude more, it just makes that sell-off just looks that much the more just appalling and horrible. So if you're a Chipotle bull, I do apologize, but it seems like that was the first maybe inkling we had this quarter. Every quarter seems to have a narrative. Every earnings season seems to have a theme, and it seems like the theme this year, this quarter at least, is buy all the premium you can, because it's looking pretty juicy out there. Twitter, of course, looking pretty good earlier this week as well. They were pricing in about $1.50. They ended up moving $3 after the announcement. They're up about $4. They were pricing in about a 9%. They ended up moving over 20% as a result, just intraday, and then the next day, of course, as well. We were talking earlier, of course, about Amazon. It's probably the one everyone's really focusing on these days. Like I said, the looming specter of Amazon just almost touching every conceivable industry. They seem to have an argument. Amazon's coming. In fact, I was at the big FIA conference last week here in town, and Amazon was there as well. Not a firm you ever really see at that event before, so they're maybe starting to dip their toes more into the financial services from a cloud and everything else perspective. So they're encroaching in a lot of different industries that they really weren't playing in before. And maybe that, obviously, like Whole Foods, which probably accreted to their bottom line. They were pricing in what looks like now a comparatively ridiculous $39, about $40, or right around 4%. They ended up opening up today, just opening, mind you, up about $84. So over 2x that just off the bat. And that's after they had the bigger move intraday, or last night, I should say, overnight. And then, of course, intraday, they're just knocking the cover off the ball, up $125. So just crazy town here in this, the euphoria. This is starting to get a little of... Granted, there's numbers behind it this time, but it's starting to get a little bit of the shine of the .com time. I was on the CBOE for that, and got to that point where people would say, "What does this name do?" And you'd have serious professional traders turn to you and say, "Who cares? It's online," and they would buy it. And I'm not saying this is a bubble, but this does start to get a little bit of a feel for that. And of course, we have the old Googs, aka Alphabet, also popping off this week. They were priced in about $41, right around 4%. They didn't open up that. They looked like they were doing well in the after hours, and they kind of gave a lot of it up. And they opened up pretty much right around that $40 level, so right around 4%. So they were looking in line or so. And then intraday, they've kind of just been lighting it up as they're just kind of getting caught up in the wave that pretty much everyone else is. They were up about $72 as one point today, intraday. So they had almost doubled their straddle as well. So that 2x number is kind of just what everyone's doing. That's just what all the cool kids are doing. And then, of course, we can't forget about old Softy. They were pricing in about $1.75. That seems laughable now as well. That was about a little over 2%. They opened up over $5, $5.50, so over 2x that straddle right off the bat. They were trading up about $7, $7.50 at one point intraday today. So you're talking 3-4x on some of these straddles. It's just crazy town. I don't know, Ophir, you guys backtest for a living, so this is probably high season for you guys. All these moves are just kind of blowing the doors off. What are you making? What's kind of on your radar? And more importantly, perhaps, what's been on the radar of a lot of your users over there at for Capital Markets Labs? And how are these moves lining up to some of the some of the big moves we've seen in the past from an earnings perspective?
Yeah, I mean, it is something to behold. I'll say, just when hearing you go through the Google, Microsoft, Amazon numbers, just relative to their straddle, it's just absolutely unbelievable. I mean, in general, owning an at-the-money straddle for earnings is, it's a coin flip, and it's a shaved coin flip. Usually, it doesn't work. Clearly, doesn't matter right now. The most interesting things that we talk about and we see relative to this earnings season and volatility is not owning the vol during the earnings release, but it's right after. So, let a day happen. Let these gymnastics happen. Amazon's up $126 and Google's up $60. Wait a day, then get in next week on a short-term straddle, and that tends to work very well. So that's what a lot of our members are looking at is the larger the move today, the more likely it is that next week is going to see some volatility. It could be directional, it could just be up, but it could be a retracement. And so those trades have worked very well for the last couple of years, and seeing these bombastic returns on the day of earnings, it just bodes very well. There is some at least historical volatility now, some stock volatility, and it tends to mean afterwards there's going to be continued volatility.
Yeah, I tend to agree with you. We see that with Google. Google has a really good track record of continuing to perform. I found that especially on these big moves, you get a lot of these. And Ophir, stop me if you think I'm telling you tales outside of school. And we've talked about this on, I think, Option Block before. But I feel like, especially on some of the more widely held names, you get these call overwriters that come in and just slam call options to the point that they probably get a little overdone. And then as the stock continues to rally, it kind of creates more upside as guys are buying stock so they have something to deliver, or they're covering their call options, which also move the stock higher. And I find that, and I tell this to people all the time, you will make more money trading all the way until right before earnings and having no position, and then trading right after earnings or having no position through earnings and then trading right after, than you will ever trying to trade all these ridiculous earning plays. I love these guys that come and tell me, oh yeah, I trade all these earnings iron condors or earnings double calendars for the premium crush. That whole premium crush thing is an entire the idea that is an actual thing that over time produces P&L is one of the great fallacies that is put out there by people. Earnings, if you're a volatility trader, which everyone here is, earnings is the only piece of volatility you really have no control over when you're talking individual equity basis. I can really manage just about everything else. It's only earnings where the fair value of volatility is such a crapshoot.
You're right, because we do talk about that earnings crush a lot, and that is usually what you see. But unless it's one of these outlier conditions, and I think you could sum up this entire week as pretty much just one outlier after another. When we see multiple names blowing off the doors, 2x, 3x, 4x, then these are not little biotechs. These are actual names that people trade and follow that are sizable market cap names. When they're doing this, that's an outlier, and that's an event where, you're probably not going to see that kind of earnings crush, as Ophir was alluding to. You're probably going to actually see some more inflated vol as a result, so that could also create interesting opportunity. That's maybe kind of how many times have we advocated on this show on our network, pretty much the earnings. I mean, and I know it's tempting. Days like today, people are like, oh my God, I wish I was in this. Look how juicy and rich this is. But how many cycles have we covered now on this show alone? And how often is this the case? Very rarely. In fact, for pretty much almost every cycle in the last couple of years, the narrative has been, for the most part, sell that premium because it's been kind of overdone. So this is definitely the outlier, perhaps the exception that proves the rule. But either way, it's just been, earnings is such a binary event. I mean, today is a good example of that. You win or you lose, and there's so many factors that are outside of your control that unless you like that kind of roll of the dice kind of, and some people do. But in general, it sounds like that's interesting. And Ophir, I know we've talked about this, I think, kind of before. It's a very controversial area. Everyone seems to have their own take on it, but I like asking guys like you because you actually have data to back it up. You mentioned, for this cycle, obviously these names are outperforming, so maybe wagering on that continuing is not probably the worst bet in town. But in general, I mean, looking at your back test and things, obviously this is an area a lot of your users probably come to you for because they want to trade earnings, particularly those active retail guys. We've seen a lot of data in the past that shows it's kind of a coin flip 50-50 earnings. Have you seen any data that really makes you want to lean biased one way or the other if you had to go through the event itself, long premium or short premium, or is your data pretty much mixed as well?
This would be stock by stock. The only time, I could make a reasonable bullish argument, bullish on volatility, not stock direction, right? So getting long Vega into the event and holding it through the event would have been Netflix. If we're talking about, names that we all recognize. That's pretty much the only one. The rest, it really is kind of coin flippy. Usually, I just hesitate to say this. Usually selling it is better than buying it, but then you have a day like today and you just lost everything you made. So I would stay away from it. But usually selling it is better than buying it, with the exception of Netflix does have a tendency to kind of, I wouldn't make this trade anyway, but Netflix does have a tendency to kind of have outsized moves, but it's not enough where I would say own the vol on Netflix. If someone put a gun to my head, I'd say, okay, Netflix. But the rest of them, just pass. But
yeah, Ophir, my general belief is you're right, is that most of the time the underlying underperforms its straddle. But when the straddle is wrong, it doesn't tend to just be a little wrong. It tends to be a lot of wrong. And that's where the whole sell premium into earnings it gets beat. Is you do 10 of these trades and you win 8 of them, but you win a little bit on 8 and then you lose a ton on 2.
Yeah, that's exactly right. You get this false narrative, this false sense of security that you have a 75% win rate, but the 25% that you lose, you just lose huge.
Right.
And so it's, and also we have empirical and explicit data that shows that's the case, and that if you're really looking for opportunities for earnings, which we do, earnings for me, earnings season is just Disneyland, right? There's so many trades. The only limit is the amount of capital we have. It's like, well, I'll choose the ones that are going to. So there's so much data to show how you can trade before earnings and how you can trade after earnings. And there's equally as much data to say, just don't trade earnings. There's so many opportunities around it. Just let it happen. Let this happen. This is awesome. Just watch it and just talk about it and say, man, this is incredible. Now, buckle up, and now there's some trades you can do starting on Monday. But yeah, it's definitely. I would say it's kind of a false narrative you get, like if you sell a lot of out of the money puts. It just feels really, really good until it doesn't. Right? You have an 80% win rate, but the one time you lost 9,000%.
Right.
So don't. Yeah. I can't give advice, but I just think stay away from earnings. When I say stay away from earnings, I mean the day before and after. My trading volume goes up 10x in earnings season, but never during the day.
Yes, I love trading things around earnings. It's just going through the report itself. I need to have something really wrong with how volatility is pricing for me to step in. The last time I made any type of real earnings play and I made it decently, was when, I want to say a year ago, when they legitimately didn't even bother to bid Apple options up into earnings, and then it made like a $10 move. Do you remember that early last year, Ophir? There was like this weird period.
Tweeting about it. Vol was dropping. It was the most bizarre thing I'd ever seen in my life. The vol was dropping the 2 days into earnings.
Yeah.
It was absurd.
Yeah, and that you had to. It was just, they dropped it 2 days prior, and then it made a crazy move. I think it went from, I want to say that was the time it went from like 120 to 130 overnight, and then went on a run all the way. That was what led to the run where it ran to 150. It was just insane. That was the only time I've ever looked at earnings and said that is just wrong. I've got to own that, and that was it.
Yeah, we said that many times. The earnings, I've used the analogy of, Niagara Falls, and, you can ride it right up to the falls. You don't want to ride it over the falls, and that's what the earnings event is, because then you're at the whim of gravity, and you have no control over it whatsoever, and that's kind of analogous to earnings. You can get back in after the falls and paddle around and have fun, get a little wet, but the event itself is a crapshoot. How many people have you had on? How many times have we talked about? How much data have we crunched and our guests crunched that have all kind of come to that same conclusion? It's kind of a crapshoot. So Some of you like to go to Vegas and play the die, and we're not saying you can't trade. Like we're just saying, we're not saying you can't trade this season. Trading around is all kinds of great stuff going on that you could trade before and after. But the event itself, those are some turbulent, frothy waters that are probably best to avoid. I mean, look at what we were saying before. People have this narrative of selling premium during earnings, and look at this. How many times have we seen Microsoft underperform until recently? You could capture 30 cents, maybe you get 45 cents, you're lucky, and you're looking really good quarter after quarter, and then this quarter they come out and they blow through it by 4x. That's gonna wipe out years worth of 30 to 40 cents at a clip. So you could just see the example right here. It's the one outlier that ruins everything else, and you can look at and take your poison this week. Pick your Amazons, your Chipotle, whatever name it is, Google. You could see that example played out there as well. It's the one outlier that pretty much spoils the rest of your year. So don't be that guy. Don't get caught up in that. As exciting as it is, don't get lured to the dark side. All right, speaking of the dark side, VIX continues to flirt with single digits. Doesn't seem to want to get there quite yet, but we'll see. We got about half a show left. Maybe we can get in line with my prediction. Like we said, VIX cash flirted with double digits this week, then kind of giving it back towards the latter portion of this week as everything just seems to be in rally-ho mode across the board. We also saw VVIX kind of lighting it up, getting up to around that lofty 100 level, kind of coming off a little bit today, down about low 93. Still, I say low, but that's still off, the 52-week kind of low, which is somewhere in that 75 range. So still fairly elevated. Skew index also taking it on the chin since last week. It was up around 145, starting to get in that kind of top-heavy, frothy level. This week back down to around a comparatively reasonable 135. Be interesting to see the numbers. A day like today would be a nice day, Mark. I know we've advocated for it before, but a day like today would be nice to have a real-time skew index. Would you concur, sir?
I would indeed. I think today would. And we just saw the VIX print briefly below 10, and I printed all the way down to 9.98.
Crazy town.
I know. But this would be a great day. This whole week, the skew index, real-time skew index, would have been extremely valuable. I would have loved something like that because you kind of saw skew act that way. It was super bid, and then it stopped. And they said, you know what? Again, we're not worried. We don't care. We got nothing to worry about. The way everything. I mean, and there was some really screwy. There's some. If you're looking for interesting skew, rather than the skew itself, and I hate to be harping on all these equities, but one of the signs that I always look for when we're getting near kind of a frothy top is when you can do a risk reversal and get paid on it. And if you look at all the FANG names at the hot tech, you can put on a risk reversal and get paid in Amazon, Apple, Alibaba, Microsoft, all these names. You can buy a put option, $5 out of the money, sell a call option, $5 out of the money, and get a nice credit. And generally speaking, that is one thing that makes me. That's like it's like a CNC music factory for me. It's a thing that makes me go,
Well, you're right, because that is obviously the opposite of the traditional shape you would see out there. Usually, those bearish type risk reversals, aka collars. Usually, you got to pay up to do those, especially in equities or in indices. Except when things get a little crazy. And if you like crazy skew, commodity land is where they got a lot of that for you. So stay tuned in about an hour for TWIFO. We'll break down. Maybe you want some real time S&P skew. We got that for you there. We can even do it. Call wing versus put wing if you like. So we can break it down individual wings, a.k.a. the quick skew. So come back for TWIFO in about an hour. I got a feeling, just got a hankering, we're going to be talking a little bit of index vol. And I got an inside track, so I should know. All right, and then moving on here to also, as you might imagine, NASDAQ vol. Kind of interesting. I think you can call it getting the technical term crushed as NASDAQ just continues to print ever higher throughout there is no limit to how high NASDAQ can go today. You're seeing 1430 out there in VXN, obviously the NASDAQ VIX as well, off a conservative cover your ears mark, 10% or so percent. I know that's heresy. But c'est la vie. And the VIX futures were looking interesting. They're about not quite a point to the front month and about 1.5 points out to about 2 months or so. So not quite as lofty as we've seen, of course, today's downside move in the cash, probably exacerbating that a little bit. Before we get into the weeklies, Mr. Ophir, You're our guest. Anything else catching your eye out there from a broad vol perspective, or it could be VIX futures, or it could be NASDAQ volatility, or Skew index, or anything else catching your eye from a broad vol perspective, I should say, this week?
I would just say broadly, it's kind of a repeat, but we had an opportunity, it seemed, where big tech earnings were coming. They were driving VIX or VXN, doesn't really matter. We saw VIX over 11 4 days in a row. We saw it rising those 4 days in a row. We saw, what this bull market calls a sell-off a little bit earlier in the week. We had the beginnings of someone saying, okay, look, we're getting out of this absurdity where we measure VIX at 10. And it's just not. It's just, we've got, unless, I don't know, Apple and NVIDIA or someone really spooks the market. We've got another 3 months now, probably, of this. And
yeah, Ophir, think about this. Catalonia just declared independence. Spain, the Spanish stock market is down to almost 2%, and we're up 20%, and the Nasdaq's up 2%. The Russell 3000 is up 1%. The S&P's up 0.75%. Even the lowly Russell is up 44 basis points. The laggard being the Dow, but that's because the Dow is, the Dow Jones Industrial Average.
Well, the Dow also, keep in mind, the Dow was ripping as NASDAQ wasn't doing so well. So it's not, they don't have to time perfectly, but the Dow was ripping because of Caterpillar and I think it was 3M. And so the Dow's participated too. It's just, right now, I just got to tell you, I just like being long puts in the VXX, just the standard trades are just like, this must end. No, again.
Yeah. All these fancy trades you got going on, Ophir. You can't keep up with these complex strategies. You got puts in the index. All right, and Mr. Rhodes is not here, so when the cat is away, the mouse will play. It's time for the Meatballs Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, just insert Meatball in there, and you have your own theme music that you've been asking for so long, Mark. There you go. I got you covered.
All right, you make the background music, and then I'll make the announcement. All right, you ready? Set.
All right,
go.
I'll
make the music. You do the announcing. All right, you ready?
All right, there we go. Ready? Okay, ready?
1, 2, 3.
And now it's time for the Meatballs Weekly Rundown. There you go.
All right.
Someone cut that and print it and turn it into something horrible, and that'd be great.
All right, so we actually saw a lot of interesting spreads trade across different months. So these are all kind of some weird ones to trade. So we saw these are all VIX trades, obviously. VIX. So a customer bought 40,676 on the November 1st, 18 calls, paying 10 cents. Against this, the customer sold 12,272 of the November 22nd, 50 calls at 50 cents. So that's essentially
50. What the?
Yeah, so 50 cents, 50. So kind of an interesting trade there. He put out about put out about 400,000 in premium on the buy and took in about 600,000 in premium on the sell. So, net premium intake, but not bad.
This guy think it's February to trade the 50 strike out there? That's when we get the crazy trades. It's usually February, right?
Yeah, no kidding. So here's another one that traded. This involved November and the Nova Weekly. So we had the VIX. These are all Nova. So here's a weekly one. So VIX Nova 29, 16 calls. Paper sold 8,113. We've seen this trade before at 65. And then on the Nova 29th, he sold 4,150 at 59. And then they did that on two separate prints. They did that the Nova 29 16 calls for 55 then, and they did another 4,150 for 47.5. So that was a two-way. And then we've got this three-way that went up. It was the November 12 calls for 179. They sold those. They sold the November 13 calls at 142 and bought the 14 calls for 118. That was like a weird, stupid three-way that went up. We're also seeing just kind of visually, as I look at what's going on today in the VIX itself, we're seeing some pretty decent volume. The Nove, the biggest volume is the Nove 10.5s, which have already done almost 3,000. We've also seen some volume on the Nove 11.5s. Those have 2,250 in volume, and then a little bit on the 19 and 20, all on the Nove firsts. I can tell you that on the middle of that big sell-off on Wednesday, I bought to close 1,000 of, remember my 1x2, the Nove 10 half 10 for even money? Yeah. So I closed my nickels I closed my 1,000 I was short for a nickel, and I did that tied to futures, and then I sold off some of the futures as we rallied. And so I'm sitting here long the 10.5 puts, which are currently pricing themselves 30. So that is one thing I did. Looking at some of the other weeklies, not a lot going on in the November 8s yet. A little bit, nothing really trading today in the November 2nd or the 29s. Actually, in the 29s, it looks like our 16, our trader that had the 16 calls on, the Nove's 29 16 calls is closing those. And we also have the 17 calls being closed. That looks like a weird little 1x2. That they've traded 8,000 of the Nove 29 16s and 4,150 of the Nove 29 17s today. So there is some decent volume in November today, but we're starting to see some really big prints go up in the weeklies, and volume, especially on the puts and some of these other things, really starting to catch on in these weeklies. Open interest in the November 1st weekly, which expires next week. I'm going to look just off the top of my head. I'm going to say put open interest is 33, about 45,000. And call open interest is, let's see, that's 50. Call open interest in the November 1st is probably over 100,000 contracts right now, Mark. So to say that those are really seeing volume, I think it points to the fact that, guess what? There's some action in these names now.
Yeah, that's kind of been the narrative we've been seeing. A couple of narratives you could say out there in the VIX weekly options. One is size, like you just pointed out. The size is growing out there. They're becoming, a go-to trading vehicle for more institutional players, clearly, as you're starting to do some size. And B, I think maybe the second narrative you could ascribe to that is kind of weird. We're seeing weird stuff out there that you probably normally wouldn't assume you'd be seeing in the VIX weekly options. We're seeing size stupids, as you just mentioned. We're seeing size strangles and flies and things that you don't normally probably would associate in the weeklies because you don't use a lot of time for these things to pay off, and yet we're seeing that stuff. So maybe two narratives out there of size and weird. Would you agree with that, Mark, or you think it's more kind of par for the course?
Yeah, I agree. It's size and weird, and I think the main reason is that people are really able to time their volatility trades now in a way that they had not been able to do. And then you add in the fact that now I have S&P 500 options that are trading almost daily. Look next week. How many SPX expirations do we have next week? I believe 4. I believe we have one on the 30th, the 31st, the 1st, and the 3rd. Think about that, Mark. So now that we've got the ability to kind of trade SPX every day of the week, and you have these VIX weekly options, I think traders are really trying to time where they hedge and where they collect that hedge. And knowing that they can then go into the SPX and take care of a single-day problem or a multi-day problem with an option that expires in 2 or 3 days. You could make an argument that part of the reason why volatility is a lot more depressed is that the ability to time where to hedge and when to hedge and how to hedge it, and collect premium in front and trade other stuff around it. Today is the 27th. A month between now and a month from now, here are the number, not counting today, here are the number of expirations I have between now and November 27th. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's 2 on the 17th, 12, 13, 14, 15. So the 27th is a month from now. All right, over that day we have 4. We have 5 trading days next week, 10 trading days, 11, and we legitimately have, between now and the 27th, we have 20 trading days. 15 of them have an SPX expiration on them. Think about that.
That's not enough choice for my liking, sir. I need more. I need more options. Pun intended.
That's where volatility is gone. Is the fact that you can time so well now in SPX, you don't need to put on this massive hedge. I can just hedge what's happening today.
Yeah, I mean that's kind of what these products were kind of created for, right? Was it specifically to hedge, specific events, and then they've kind of just morphed into so many other use cases. I don't know, Ophir, before we get into the big VIX weekly options, obviously I'd imagine weeklies are a big part of what you guys do over there from a back test perspective. It could be VIX or it could be others. Are you seeing a lot of your users come into you saying, "Hey, I want to test specifically in the weeklies these days"?
So the weekly options are super popular when it comes around earnings, whether it's, the VIX-related products, VIX, VXX, whatever. Also with the single names. So weeklies, there's, CBOE's onto something here. I think we figured that out a few years ago, but these weekly options are gaining traction. I also do think, for whatever it's worth, I think at some point in the near future, let's say, maybe we're on the phone in 2 years, I think there will be daily options, at least in some of the big names. I actually think we are going to daily options.
As Mark just pointed out, we're kind of almost there already, right? We're getting close.
yeah, exactly. The SPX is kind of there. The SPX, Mark said there's actually 2 expirations on the same day for SPX next.
They're I think they're slowly fading out. I think their plan is to slowly fade out maybe the AM expiration, except for quarterlies, which you have to keep because the S&P futures. But why do you need an AM expiration for a serial month? For those of you that don't know, the difference between a quarterly and a serial. So a quarterly is lines up with an S&P 500 future. So the quarterlies are March, June, September, and December, and then the serials are the ones that are in between, and those expire on the other 8 months. There's a really good use case for lining up the quarterly expiration with the S&P future. I'm not so sure that there's a huge use case for AM settle on a serial month. Love to hear your opinion, Ophir, on that.
I agree. In fact, I think you could actually go even further if it is an argument not to have AM settles off of when it's not on futures quarters. It's confusing and frustrating, and if CBOE is trying to get more retail in, it's just nothing more confusing than like a VIX settlement or an SPX morning settlement. You're like, wait, what happened? When is expiration? So by the way, I think VIX is under 10. But yeah, I agree with you completely, Mark. It's
it's already printed 998 and 999.
Yeah.
But it's sitting here right at 10 right now.
Getting close.
But they are just decimating VIX futures right now, guys.
I need a little more.
This is just
on the downside. While that decimation continues, let me go really quickly through our hot VIX action for the week, hot VIX strikes. If you could probably guess most of the top 4 or 5 yourself, which is still our big friend out there who did that 3-way. Number 1, with a bullet, the D's 25s continue to reign supreme. 622,000 contracts open on that strike. Number 2 falls off $1.50, but it's still sizable. 470,000 of the D's 15s coming in for number 2. Number 3, get a little bit of an upstart in there. The Nov 20s challenging for the getting into the top position here. 420,000. Only 200,000 off the top spot there. Number 4, the other part of that 3-way, the only put on our list, the D's 12s, 357 puts, I should say. D's 12 puts, 357,000 there. Number 5, Nov 21s, 286,000. Number 6, the Nov 17s. Here's where we get to our little call strip, 264. Number 7, Nov 15s, the comparatively reasonable Nov 15s, 258,000 contracts open there. Number 8, the D's 22s, get a little D's action out there again, 233,000. Number 9, the Nov 18s, 205, and round out the top 10. The D's 17s, 192,000 contracts open. Total of about 10.8 million, about 8.6 on the calls, and about 2.2 million on the puts. Before we roll out, Mr. Meatball, I'm going to play this quiz with you again. I'm guessing you can get the right answer. If you had to guess right now, number 1 open interest position in the VXX, what would it be? I'll give you a hint. You own 1,000 of them.
I own 1,500.
Oh, you added more.
No, I had 1,500. I just did that all at once. And it's the VXX Jan 2019 10 puts.
See, Ophir, he comes on this show for trading ideas. That's why he comes on this show.
I really do like that trade a lot. That was fun. It always makes you feel good when you get filled and then there's 3 different parties trying to bid it up behind you.
Ophir, you got to do a nice back test on about 60% out of the money VIX splits.
That'd be more like 80% out of the money with a year and a half to go.
Yeah, that's true. That's about 80 actually. It's pretty far out there. There you go. That'll be our back test of the week for you, and we'll request that. Meanwhile, though, we got some listeners who want to get in, so let's get on to it. It's a little bit of our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
We'll say we're kind of running up against it, so we'll save our discussion on after hours. You guys are all voting like crazy out there. I'll just give you a spoiler alert on how it's doing out here. Here we have like a day or so left. The voting is coming in pretty hot and heavy. You guys saying 52% saying you want top names only for if we do some sort of pilot for after hours options trading, so Amazon, etc. Probably would have looked good this week. 24% saying you want a pilot for earnings season. Surprise, surprise, given what we're seeing this week. 21% said just keep it basic, a nice simple limit order book, match up the orders. If you get match up, you get filled. If not, c'est la vie. And 3% say other. We're getting a bunch of suggestions. John Girl saying that there should be a pilot with 100 companies, most options volume past 90 days as a qualifier. So some sort of weird rolling pilot there every 90 days. Kind of interesting, maybe a little confusing, but kind of interesting too. Is it in this week? Is it out? What's trading this week? Money Engine says you should start with SPY, SPX, and Apple. Okay, interesting. And then Mike Turvey says market making firms will be lining up for this one, but I think he's joking because he's got a laughing emoji here. He says we need to shore up regular hours liquidity first. I can see that. There's definitely a liquidity issue in the broad regular hours as well. Let's go hit this one. I think you like this one, Mr. Meatball. This comes from J3 Dingle. He or she saying, "Dear Mark Longo, long-time listener, at least a year or two, so maybe not that long. I guess in the long decade span of our network, you're a wee babe, J3 Dingle." He goes, "But first-time emailer. I would guess I'm not the first to suggest this, but have you considered some excerpt of some rendition of On Top of Spaghetti for Mark Sebastian's theme song? Looks like the song even has some Chicago heritage." And he sends me a link to this Wikipedia article about it. Apparently, it was created somehow due to Chicago. He says, "In 30 seconds of YouTubing, I found a Beyondi's version, which is pretty good. The dreams/nightmares one has on a Sunday night slumber." So there you go. I guess he couldn't sleep on a Sunday night, and he found this. Let's see if I can play it for us.
On top of volatility.
Can you hear that? Can you guys hear that?
Yeah.
Yeah.
So there we go. That's what they want for your theme song, Mark. What do you feel about that? J3 Dingle's suggestion.
Mark, how about we do On Top of Volatility? I'll cover it. And let's face it, I'm cheesy. Loaded with cheese.
That means I gotta go out and get voice actors to do this professionally.
Yeah.
It's gotta sound good.
Come on,
you're costing me money. This guy's got
it's
a nice
the greasy
freebie
meatball
version.
With trades that you'll please.
Tell you what.
That will please.
Tell you what.
How about that?
We'll have Ophir do it. And we'll have it do it over his phone connection, so it'll sound really good. How about that? Let's do that. Does that sound good? He can record your voiceover for you. I like your suggestion there, J3 Dingle. Mark's not buying it though. I like it because it's free. Mark wants all this well-crafted VO. He's just jealous of what Russell has because it was silly. It was silly. Oh, we'll see. Maybe we'll take your suggestion and run with it in some interesting format. I'm sorry to hear you can't sleep, but at least you got our content to keep you company, and you could daydream about theme songs for the Meatball, as we all like to do on our Sunday evenings. All right, we got to get to it. We spent a lot of time talking earnings today, but that's kind of the game this week. Let's go on to our final segment. Yes, it's time for the embarrassment block, a.k.a. the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's see how we're shaping up here towards the end. Oh, 10 even. So now I was a wee bit too low. I was 965. So we got to go 0.35 off for me. Mr. Rhodes was comparatively close. He was only off a, 0.13 for him. So he actually gets you, Mr. Meatball, because you were 10.16. So you were 0.16 off. And Mr. Rhodes was actually 0.13 off, 987. It was a close dance this week. We were all really close. But so far, I guess the cigar has to go to Mr. Rhodes, who is not here, which means that, guess what? Ophir gets to go as the guest because he gets Russell's winning place. So Ophir, as our guest, you get the dubious honor of guessing first. Where do you think VIX Cash is going to be at this precise moment, end of the show next week?
I'm just going to have to, I'm going to stay with the obvious streak here. I'm going to say 980, 9.8%. Yeah, lower.
980. Interesting. I usually like to go first, but I gave it up to Ophir, so kind of doesn't matter when I go now. Let's let Mr. Meatball, otherwise he'll be upset because he got second and he didn't get to go second. So let him go second. Mr. Meatball, what are you feeling? 1x2 out there, notwithstanding with futures.
Well, if I'm trading my position, then I'm hoping that we go here or lower. So I feel like I should bet against my position. Let's see. So at least next week, if I'm wrong and I lose, at least I'll have that to go for. I'm going to say 10.16.
Gee, how did you ever come up with that number? Oh, the magical, mystical calculations of the Meatball. Well, I'm mocking you, but I'm kind of going to do the same thing this week. I kind of like my number from last week. It was pretty darn close. And I could see, we got the stuff in Spain and some other X factors that could get us back into those comparatively lofty 11 handles. So I wouldn't be surprised to see a blip or two up there, but I think staying there for this time next week, I'm kind of liking where I was. I'm going back 965. So deal with that. And of course, Russell isn't here, so his ghost is going to just be wildly bullish volatility. He's going to go, I think, a nice hefty 38.3. That's what he's feeling out there. That shows him right serve him right for choosing a work trip over this show. How dare he? All right, listeners, that music means, unfortunately, you come to the end. It's been a fun road. We didn't even really get that much into VIX. We were so busy with the earnings, but, it's a fun week. We got a lot of your questions. I know you guys want to get more of your questions on. Maybe we'll do a Q&A palooza one of these weeks. There were just too many earnings to not talk about them this week, listeners. But before we go, let's go back around the horn one more time. Let's start with our guest, Mr. Ophir. If listeners are interested, we were talking back testing earnings and things pretty much the whole week, or the whole episode, I should say. If our listeners are interested in that sort of thing, they want to check it out for themselves, where should they go? What should they do?
Just go to cmlviz.com and you can test your options ideas empirically and explicitly. Before earnings, after earnings, ignoring earnings. You can use technical analysis to see if your technical signal works. cmlviz.com. That's it.
Yeah, don't trust our words for it. We're just three crazy dudes. Just go out there and test it for yourself. If you got an idea, go see how it performs. cmlviz.com. To learn more, kick the tires for yourself. And while you're in a tire kicking mood, don't kick him, but maybe kick out some of his webinars over there in the land of the pit. Mr. Meatball, what's cooking in the land of the pit, sir?
Well, my question is, do they need a label warning for their explicit results? That's my first major question.
Our show is no longer clean. It's an explicit tag in iTunes.
Is Al Gore's wife protesting cmlbiz.com, or is that what's going on?
That volatility prediction is just too high. That's explicit.
Tipper's coming after you guys.
We've broad-based political support.
Hey, if you're interested, we got a big announcement coming up in the next week or so, but at Carmen Line. But if you're interested in some volatility exposure, and you're not interested in doing it yourself, and you're a qualified investor, reach out to me. You can call us. You email Mark at Carmen Line Capital. I'll be happy to chat with you. And at Option Pit, I'm doing a webinar on earnings tomorrow. You can go to our blog, optionpit.com/blog to sign up.
Carmen Line, of course, listeners, with a K, K-A-R-M-A-N, so not like the singer Carmen or anything like that, C-A-R-M-E-N. Go K, K for capital. There you go. And then chaos and all other fun, silly spellings that don't really have a K. All right. On behalf of Mr. Ophir and the Meatball, and let's even go for Russell, even though he's dead to me, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, of course, for joining us live. We love you guys, too. If you like all this talk of Skew and fun stuff, come back in about half an hour for TWIFO. We'll be talking all that good stuff, plus a lot of vol action in places like crude and gold and all. Maybe some places you don't suspect. Like, who knows? Fluid milk, lean hogs. You never know what's going to pop on to that show. So check it out. Hopefully, we'll see you there. If not, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.